Hello, in this section we will take a look at the adjusting entries, the financial statements, the closing entries, and the reversing entries in both QuickBooks Online and Excel. This looks like a lot of information, and it is, but the section will actually be around the same size as the prior sections because remember the actual input of the data for month 1 and month 2 is really where the accounting department does most of the work. Most of the financial transactions are happening during that time period. At the end of the time period, we're going to have these adjusting entries. And the adjusting entries are to make sure the financial statements are as close to an accrual basis as possible for the reader of financial statements to then be able to use them to make the best decisions they can. In other words, we're trying to make the financial statements as of the date they are being used, typically the end of the month or the end of the year, as correct as possible. So we're going to go in, we're going to make any tweaks, any adjustments we have to do at that time period. Typically, those tweaks and adjustments will be similar. They'll be part of the system that we'll set up. We'll do that both in QuickBooks and in Excel. The adjusting process typically has more theory involved in it. Oftentimes, small businesses has an outside CPA firm that helps them do that either monthly and or yearly, or that's done by a separate department oftentimes. And so we'll go through some of the more conceptual things to do that. There's not a form usually to set that up. We oftentimes will be touching in on the idea of debits and credits in order to record those not only in Excel, but also in QuickBooks as typically you need to in practice. Then once those are created, we make the financial statements. Now in QuickBooks Online, of course, once that has been done, QuickBooks Online will generate the financial statements, the income statement and the balance sheet, or the profit and loss. And we'll interpret that by actually building the financial statements in an Excel worksheet. And we'll talk about some of the differences. How is the financial statements going to be built? And what are the things QuickBooks does that might differ a bit from the financial statements? As we've discussed a little bit as we go through this, some of it will just be terminology. So the name of the income statement is called the profit and loss statement. And some other groupings and some other account names on the financial statements may differ than what we would typically see on financial statements that we would then present. So we'll go through some of those differences, and we'll also look at how to create the financial statements, how they're being built. As we do that, we create the financial statements from the trial balance. We'll get a better idea of what QuickBooks is doing to create those financial statements. And as we've discussed throughout these presentations, as we get a better idea of what QuickBooks is doing, we get a better idea how to set up the system, how to put in the data, how to set up the data entry process, and then to know what that data entry process is doing to generate the financial statements and be able to check when we see that the process has a problem. Then we're going to have the closing entries and discuss the closing entries. This happens after the kind of main event. After the financial statements have been created, we could do closing entries. And they're really kind of to set up the next time period. It's kind of like if you were to have a restaurant and you made the sales at the end of the time period, and then you've got to clean everything up. You got to take out the trash, clean the grill and whatnot. All that is really to prep for next time period. It's part of today, but it's really there for tomorrow to start the new cycle over to earn revenue tomorrow. We have a similar process here. The financial statements are created. The day's pretty much done in terms of what we were trying to accomplish, but now we have to prep for the next day closing process. Within QuickBooks Online, it's going to be pretty straightforward. The closing process will actually be somewhat of an automated system, and in Excel, we'll explain that automated system. And the better we understand the closing process, the better we get an understanding of the relationship between the financial statements, between the balance sheet, the income statement, the statement of equity, and then we can interpret once again what the system is doing, how to read the financial statements, how to adjust for problems. Then we'll talk about reversing entries, which is going to be reversing these adjusting entries. Not all of them, but some of them. We'll talk about why you would do that, which ones we would want to reverse. And it's a kind of convention to have reversing entries, and it's not a perfectly accrual system to do the reversing entries in the format we often see them done in practice, but it is a convention that logistically works well, meaning we're going to divide up the departments, we're going to have the accounting department do what they do, set up the system to make it as easy for them to do what they do. We'll then adjust things at the end of the time period, have that done in a separate system, and then we will reverse those adjustments so that it will then go back to, we can then go back to the normal accounting department to do their process without worrying about our adjusting entries. We'll do all that information both online in QuickBooks and in Excel. QuickBooks giving us how we're going to put that into a computer system, and then Excel giving us really more detail of how everything ties together within that system.